Hi, first of all, you're warmly welcome to the Bismatics YouTube channel. So today I am going to discuss about the ninth lesson of grade 10 Business and Accounting Studies. Out of that, from this video, I hope to explain about only the bank account. When we consider business, there might be a large number of transactions per day, and out of that, there may be cash transactions with different values. So to do these cash transactions conveniently and securely, most of the businesses open current accounts in banks, and these current accounts also known as demand deposits. For accounting purpose, we call this as bank account. From business point of view, bank account is considered as an asset account, same as the cash account. And from the bank point of view, the bank balance of the business is considered as a liability because they have to pay the business whenever they request. This is the format of the bank account. On the top of the account, we should write the name of the account, bank account, and here debit side and credit side. This is same as the cash book. In the debit side, date, description, ledger folio, discount allowed, and value columns are there. And on the credit side, same as debit side, date, description, ledger folio. And here the difference is in credit side, you record discount received, discount allowed in debit side, and discount received in credit side, and finally the value. Okay, let's see what are the transactions related to bank account and how we should record those transactions in bank account. And the first one is deposit of cash in the bank. When you deposit cash in the bank, what will happen is cash in hand will decrease and the balance in the bank account will increase. Since we are considering bank account as an asset account, the double entry will be bank account debit and cash book credit. The source document related to this depositing cash in bank is cash deposit slip. Here I have given an example, People's Bank cash deposit slip. Here you have to write the account number, bank account number, and account holder's name, why you are depositing money, and signature of the depositor, and here you have to write the amount. And it comes with two slips, a bank copy and customer copy. The second transaction is checks received from debtors and cash sales. When business receive checks from debtors or for cash sales, they record it in the cash book because as and when they receive the check, they don't run to the bank and deposit the check. They keep the check in the cash drawer until the check is deposited in the bank. So therefore, when you put the check into the cash drawer, the cash balance will increase. Therefore, we debit the cash book and credit the relevant debtors account or the sales account. Then third transaction is deposit of checks received. So when we deposit the received checks, we debit the bank account and credit the cash book. We debit the bank account because bank balance will increase when we deposit checks. Here cash book is credited. Here cash book is credited because we have already debited the cash book when we received the check. Then once we deposit those received checks, we credit the cash book. When we deposit checks to the bank, we have to give the check with cash deposit slip. We have to fill the cash deposit slip, and along with that we have to give the check. Here I have given an example of check deposit slip. Here you have to write the name, account number, and here a space is given to write the check number, bank branch code, and name of the bank branch. And here you have to write the amount and sign. This is also comes with two slips, two copies. One is for the customer and the one is for the bank. In the previous slide, we have discussed how to record checks received and check deposits to the bank. And there are some circumstances where the business deposit the check at the time of receipt. So when we deposit the check at the time of receipt, we don't record them in the cash book. We directly record them in the bank account. So the bank account balance will increase. Therefore, we debit the bank account and credit the relevant debtors or sales account. And when we issue checks to do some payments. When we issue checks, the bank account balance will reduced. So bank account will be credited and the relevant expense account or the relevant payment account will be debited. The source document related to payments is the payment voucher. And here I have given a copy or sample of a check. This part of check is known as counterfoil. Here we have to write the date, why we are paying this check, and the amount. When we pay this check, what will be the balance amount, likewise. And this part is the check. Here name of the bank is name and the branch, date, to whom we pay the check, amount in letter words and in numbers, and here the account holder should sign the check properly. In this is the check number, branch number, and account number is recorded in this part. The next one is dishonoring of checks. So what do you mean by dishonoring of checks? Dishonoring of checks means there are some instances where bank refuses to pay for the checks. Or bank refusing payment for checks that has been presented means dishonoring of checks. This can be due to different reasons. Normally a check has to be honored by the bank because a check is considered as an order given by the account holders to the bank to pay the stated amount in the check to the stated person in the check. When you write a check, there's a name in the check. We order pay this person this amount and we sign the check. Therefore, it is considered as an order. So bank has to honor the order and do the payment. But there are some reasons bank refusing payment for the checks. When such checks are dishonored or refused, bank is sending us a notification. This check has been dishonored. This is the reason. So that notification is known as checks return note. It is a notification sent by the bank to inform about the dishonored checks. And let's see what are the reasons for dishonoring checks. First one is insufficient balance in the current account. If you don't have sufficient balance in the current account, you can't do payment through that account. Therefore, if a check is presented to the bank, and that current account has no balance or has no required balance, then the bank is refusing payment. And the second one is checks being written disorderly. A check has to be written very correctly. If one thing is wrong, the check will be dishonored. So when you're writing a check, you have to write very carefully without there are some rules and regulations when we have to follow when we write a check. So if a check is written disorderly, the check will be refused. The third one is signature on the check is different from the specimen signature. Yes, specimen signature is before when you are given a checkbook, you have to give the bank your specimen signature or sample signature. And when you write the check, you have to put that specimen signature in the check. If the specimen signature and the signature on the check is different, the bank is comparing the check on the signature on the check and the specimen signature that you have given to the bank. If both are same, the check will be not dishonored. They will pay for the check. If the signature on the check and specimen signature is different, bank will not pay for such checks. And the fourth one is when the account has been closed. Sometimes after issuing a check, the account might be closed. If the account is closed, then bank is refused to pay for the checks given because the account is closed. And when there is a court order, if there is a court order stating to stop payments, or if there is a court case to the business, then bank will refuse payments for the checks. Accordingly, checks deposited and as well as checks is issued may be dishonored. So let's see the double entry for the checks deposited. When deposited checks are dishonored. When we are depositing checks, the bank balance will increase. Therefore, we debit the bank balance or the bank account. When dishonoring the deposited checks, the bank account will be credited because although we have debited bank balance thinking that our bank will debit our account or they will cash our check. Therefore, we have already debited the bank account. But when deposited checks are dishonored, we have to reverse the double entry because bank account will be reduced. So the double entry would be debtors other relevant account debit and bank account credit. Then the next one is dishonoring of issued checks. When issuing checks, the double entry is bank account is credited because why? When we are issuing checks, the balance in the bank will reduce. But if it is dishonored, we have to reverse the double entry. Then if the issued check is dishonored, the bank balance has been not reduced. So we have to debit the bank account and relevant account should be credited. Expense or a relevant payment account should be credited. Now you have an idea about how to record transactions in bank account. For example, cash deposits, check deposits, issuing of checks, and dishonored checks. And now we are going to discuss about a special facility given by commercial banks to the current account holders uh, when issuing checks. Uh, this is known as bank overdraft. It also known as bank OD, the shortened form. Bank overdraft is a facility given by the bank to current account holders to issue checks exceeding the existing balance in the bank account. To issue checks exceeding the existing balance in the bank account. Uh, so here banks allow their customers to issue checks for more than the existing balance in the current account. This facility is known as bank overdraft. If a business issues checks exceeding the existing bank balance, the total credit side of the bank account of the business exceeds the total debit side of the bank account. Total credit side of the bank account exceeds the total debit side of the bank account. In normal circumstances, you have a debit balance in the bank account. When there is an overdraft, the credit side is exceeding the debit side because we are given the facility to issue checks more than exceeding the amount we have in the bank account. So the credit side will be more than the debit side. As a result, a credit balance appears in the bank account. Due to this bank overdraft facility, a credit balance will appear in the bank account. In normal circumstances, there is a debit balance in the debit side. But when you balance the bank account, there will be a credit balance when there is a overdraft, bank overdraft. So this credit balance of the bank account is known as the bank overdraft, which is considered as a liability of the business. This credit balance is known as considered as the liability for the business because we have to pay later. Although we issue checks more than the balance in our account, we have to pay later to the bank. Accordingly, when checks are issued in excess the existing bank balance, when the bank makes payment on them, the account holder becomes a debtor to the bank. When a bank overdraft facility is given, the current account holder becomes a debtor to the bank because the bank is paying on behalf of us. So we have to pay back to the bank, and current account holder or the business becomes a debtor to the bank. And from the bank point of view, this overdraft is shown in as a debit balance in the bank account. In our accounts or in the business accounts, there's a credit balance, but in the bank point of view, the bank overdraft is recorded in their debit side. Okay, let's summarize what we have learned in this video. We have only discussed about the bank account. In bank account, how to record transactions in bank account, recording of cash deposits in the bank account, recording of checks deposits in the bank account, issuing of checks for payments, and dishonoring of checks. I told you that dishonoring of checks issued may be dishonored, and also check deposits or the deposited checks also may get dishonored. And at last, we discussed about bank overdraft facility. I think you might have understood what we have discussed today. I hope to do all the activities in the textbook regarding bank account and bank overdraft in the next video. So thank you very much for watching this video.